Good morning, everybody. Could you please confirm if the audio and video is clear? Good morning. Please confirm. Yes, guys. So let's begin. All right. 1 second. Yeah, perfect. So let's begin, guys. Let's start our session. Today is your exam day, but still you've chosen to give me a few hours on your exam day, and that itself is one big thing. So I'm not going to waste any time of yours. We're going to solve some good amount of questions, as many as possible in these 3 hours. All right. But I want you to have your attitude perfectly right. Tell me, in these 3 hours, do you just want to see whatever you already know? No, isn't it? In these 3 hours, you want to see something what you don't know, right? So that is what your motive has to be. So if you come across something with me that you've not seen before, you are not going to get demotivated and sad. You're not going to think, oh, even on the day of the exam, I don't know this. That will not be your attitude. Your attitude will be what? What will be your mind voice? Your mind voice will be good. Ah, nice. I've seen this. Now, if the same thing comes in the exam, I will be able to handle it. Are you understanding? Yes. So, first and foremost, you got to be very, very clear that yes, there will be some new learning here and there, but be prepared and be open and be receptive towards this new learning. All right, guys. So, let's begin. And one more thing, in this session today, my focus is going to be majorly on total income questions. All right. Because if we do a good number of total income questions today in these 3 hours, a good number of adjustments will get covered. And if these good number of adjustments we are able to cover, it will help us not only in the total income question, but you'll have individual MCQs, you have chapter 6A questions, set of carry forward questions. Even there, little bit here and there, it will help you. You get my point? So therefore, the main focus is going to be on total income questions. Your first 15 marks question, that is what we are targeting. All right, guys. So let's begin some very interesting questions. This very first question that you see over here, this one is from your recent September 2024 RTP only. All right. So let me begin. Let's read the question and then we'll start solving. See, this is a total income question. I will read the first line, I will read the last line, and then I will start computing. All right. Now look at the first line over here. Mr. Anand, a resident Indian aged 45 years. I'm going to do the thinking in the same way in which I will think in the examination. Okay, he's a resident, which means global income will be taxed for him. Let's assume he is ROR and he's 45 years old, which means okay, he's not a senior citizen. He has provided to you the following information for the year ended 31st March 24. Okay, what are they asking us? Compute total income. Number one, fine. Compute tax liability. They did not say tax payable. They said tax liability. So TDS credit, TCS credit, advanced tax and all, I will not bother about. Under section 115 BSE as well as normal provisions. So they're asking us both. They're asking us as per 115 BSE also, without 115 BSE also. Ignore AMT provisions. They did not ask which is better. So I don't have to give any conclusion. I will just compute without 115 BSE and with 115 BSE. Are you ready, guys? Can we begin? Yes, you've understood the question, you've read the question. Now I'm not going to read each adjustment now itself. I know what exactly the question is expecting from me because I've read the last line. Now I'll start reading the adjustments one by one, and as I read the adjustments, I'll do all my necessary thinking and workings. All right. Look at the first adjustment. He owns an industrial undertaking established in SEZ. So as soon as I see SEZ, section 10AA is what comes to my mind, right? Which had commenced operations during 1920. So it commenced operations in 1920. Right now we are in 23-24. So which year are we in, guys? My current year is which year? My current year is going to be 4. 4 plus 1 is going to be the 5th year. Why did I add 1? Because even the year in which I commenced business, even that year will be considered. Even that year will be counted. So I'm in the 5th year. So because I'm in the 5th year, tell me how much section 10AA deduction will I get? I will get 100% deduction, guys. First 5 years, 100%. Next 5 years, 50%. Next 5 years, 50%, or whatever is transferred to SEZ reinvestment reserve, whichever is whichever is lesser. All right. Now listen, the question says total turnover of the undertaking was 200 lakhs. So total turnover is 200 lakhs. Export turnover received in India in convertible foreign exchange on or before 30th September 24 is 120 lakhs. Guys, please ensure you keep the participation in the chat box max at the max level possible. You're understanding? You need confidence right now. On the day of the examination, you need confidence. So participate as much as possible in the chat box. That itself will magically give you a very nice positive vibe. You get my point? Come on, come to this part now. They say that export turnover received in India in convertible foreign exchange on or before 30th September 2024 is 120 lakhs. This industrial undertaking fulfills all conditions of section 10AA. So question itself says all 10AA conditions are fulfilled. I don't even have to check. And profit from the industry is 35 lakhs. We'll go step by step. First of all, what to do with this profit, guys? This profit will go into which head? This profit will go into the PGBP head, guys. So coming to my main answer over here, I'm doing total income computation without 115 BAC. I'm doing first. They're asking for both with 115 BAC and without 115 BAC. I'll always do without 115 BAC first because we're all more comfortable without 115 BAC. And then it's very easy to convert it into 115 BAC later. Okay. So now, first of all, we have PGBP. In PGBP, what is our net profit from this unit? Net profit is 35 lakhs from this unit. All right. And they've given us all this information, which means, of course, they're asking us to compute 10AA. So I'll open working note number 1, let's say, for section 10AA. Now, if you want 10AA deduction or tax holiday, you have to fulfill some conditions. Here they are saying all conditions are fulfilled. But let me still give you a quick revision. What are the conditions? 5 conditions only, guys. Condition number 1, assessee must have a unit in SEZ. Condition number 2, in this unit, assessee must be either manufacturing goods or assessee must be rendering services. Condition number 3, in this unit, assessee must have commenced activity on or before 31st March 2020. And condition number 4, assessee must have filed ITR within the 139(1) due date, which means assessee must have filed ITR on time. And then the last condition, the 5th condition, is that assessee should have opted out of 115 BAC. 5 conditions, guys. Now, are all my 5 conditions fulfilled? Come on, let's check. What is my first condition, everybody? Yes, my assessee does have a unit in SEZ. Yes, my assessee is manufacturing goods. How do I know he is manufacturing goods? Because the question says industrial undertaking. Industrial undertaking itself indicates manufacture. Yes, we have commenced on or before 31st March 2020. Let's assume that the ITR is filed on time and no 115 BAC. We are computing without 115 BAC. So all my conditions are fulfilled. Therefore, welcome to 115 BAC. Now, once all conditions are fulfilled, therefore, welcome to section 10AA. Now, under 10AA, how will I do the computation? I will take the net profit of the unit into the export turnover divided by total turnover into 100, guys. Why 100%? Because I just now concluded, right, for you, they are in the first 5 years. So first 5 years, it is 100%. So what is the net profit of my entity? Net profit is 35 lakhs. What is the export turnover? See, here you have to be careful. Export turnover received in India in convertible foreign exchange. Patiently listen to me, everybody. What is this point? See, it's very simple, okay? You tell me, is it enough if I just keep exporting? No, right? After exporting, I must also realize the foreign exchange into India. I must also bring the foreign exchange into India. Yes or no? Now, the law says I should bring the foreign exchange into India within 6 months from the end of the year. So, what is the end of my year, guys? 31st March 24. 31st March 24 plus 6 months will be what? 30th September 24. So, the law says export, fine, but then bring the money into India within 30th September 24. Only then you will consider. So here the question says export turnover received in India in convertible foreign exchange on or before 30th September 24 is 120 lakhs. You're getting the point. So export turnover is 120 lakhs and they are saying that this is received in India within 30th September 24. So I can consider 120 lakhs as it is. What if they said total export turnover is 120 lakhs, out of which only 100 lakhs was realized in India? Then you would have taken only 100 lakhs. You're getting the point. Total export turnover as it is, you will not take. Out of the export turnover, you will take only that much turnover which you have realized in India within 6 months from the end of the year. So within 30th September 24, how much export turnover you've realized in India? 120 lakhs, only that portion you will consider. Crystal clear till here, everybody? Yes. So this is going to be my export turnover number. And what's the total turnover number? Total turnover is 200 lakhs into 100%. How much is this going to be? Come on, do the math, everybody. 35 lakhs into 120 by 200. This is going to be 21 lakhs. So later, once I compute my GTI, later I will do this 21 lakhs of 10AA tax holiday. 10AA clear? 10AA entire section we've sort of covered. I hope you're crystal clear. 10AA has very high chances of coming in your examination, guys. All right. So this was our discussion on the first adjustment. Over. Now come to the second adjustment. Slowly, carefully. Mr. Anand sold equity shares. So we know right now, immediately, which head of income is coming into the picture. We sold equity shares, so capital gains. So what is a capital asset over here? Capital asset is equity shares of different Indian companies on 14th March 2024. 14th March 2024 becomes my date of transfer. Okay. Now there are two companies' shares, SAM Limited and JAM Limited. I am selling equity shares of two companies. Treat them as two separate assets. Don't do one single calculation. Each asset, each company's shares, treat them as separate asset. SAM Limited's shares itself, if I purchased on two different dates, again treat them as two separate assets. You're getting my point? So if there are two different companies' shares, I will treat them as two different assets. Same company's shares, but I purchased on two different dates. Again, I will treat them as separate assets. All right. So I'll have two different columns. So SAM Limited, JAM Limited. Sale value they've given, purchase price they've given, STT paid at acquisition they are saying okay. Date of acquisition they've given, how many shares, and FMV on 31st Jan 18 they've given. Cost inflation index also they have given. Sale proceeds were subject to brokerage of 0.1%. This will become expenses on transfer. STT of 0.125% on the gross consideration, which means we have paid STT both at the time of purchase also, at the time of transfer also, both the times we have paid STT. Are you ready, guys? This is a capital gains adjustment. Can we start computing? Yes, no need to do any thinking, any major thinking before you start computing. No need to imagine the entire answer before you start computing. Straight away get to the writing. Don't keep thinking too much. Working note number 2, I'll come to my main answer. I'll write down capital gains. I'll give reference to working note number 2. Working note number 2, capital gains. Follow the steps. My first step is going to be capital asset transfer. This is going to be my first step, guys. But here I have transferred two assets. So capital asset transferred and the period of holding, I'll do both the steps together. So what is the first asset that we have transferred? First asset is SAM Limited shares. How many shares? 2000 shares. So 2000 shares. What kind of shares? Equity shares. Give me more clarity. 2000, what kind of equity shares? 2000 listed equity shares. Why am I saying they are listed equity shares? Because we've paid STT at the time of transfer. So we are selling 2000 listed equity shares. And when did we buy these shares? We bought these shares on 2nd February 2024. When did we sell away these shares? Date of transfer 14th March 2024. Now you tell me, is this short term or is this long term? We bought on 2nd February 2024. We are selling on 14th March 2024. What's the relevant period of holding? First of all, is it 12, 24 or 36? What is the relevant period of holding? The relevant period of holding will be 12 months, guys. So this period is definitely less than 12 months. Therefore, what kind of an asset will this be? This is definitely going to be a short-term capital asset. All right, and short-term capital asset over here, is it going to be normal short-term capital asset or 111A? See, it's listed equity shares. We've paid STT at the time of transfer. This is definitely going to be 111A short-term capital asset. Okay. Then what else are we selling, guys? JAM Limited, how many shares? 1,250. Again, listed equity shares. This is JAM Limited shares. When did we acquire these? We acquired these on 16th April 2017. And when did we sell away these shares? 14th March 2024. Now, this period is definitely more than 12 months. So, this becomes long-term capital asset. But which section will I apply? Will I apply 112 or 112A? See, I'll always prefer 112A first. But what are my conditions? Is it listed equity shares? Yes. Have you paid STT at the time of purchase and transfer? Yes, we've paid STT at the time of purchase and transfer. I can definitely apply 112A, guys. Only if 112A is not applicable will I think about section 112. All right. Now I'll start with my computation, everybody. Come on, let's begin. We have two columns. First of all, we'll have SAM Limited and secondly, we'll have JAM Limited, right? So we'll start with full value consideration. SAM Limited, we sold 2000 shares at how much? 150 rupees per share. So 2000 into 150, 3 lakh for SAM Limited. For JAM Limited, if you see, we sold 1250 shares at 100 per share. 1250 into 100 per share, 1,25,000. Less expenses on transfer. We do have expense on transfer. Remember, we saw brokerage of 0.1%. So expenses on transfer 0.1%. Please do your math. Be careful. Small numbers you will get. You will get 300 rupees for SAM Limited and you'll get 125 rupees for JAM Limited. So what is your net consideration number? For SAM Limited, 2,99,700 and for JAM Limited, it's going to be 124,875. Until here, all perfect. Yes, yes, yes. Until here, all clear. Yes, now I got my net consideration number as well. Now, what comes next? You got to be very careful in your next step. What's your next step, guys? Your next step is going to be cost of acquisition. Right now, first of all, see SAM Limited, it is short term. Can you index a cost of acquisition? Of course not. Short term, you can't index. See, you can't index a cost of acquisition where depreciable asset, you can't index. Bonds and debentures, you can't index. Slump sale, you can't index. Even over here, if it is 112 cases, also you can't index, right? So, cost of acquisition, short term, I'll straight away take the actual cost of acquisition. What is the actual cost of acquisition, guys? Purchase price 120 rupees per share. So 2000 shares into 120 per share, your total cost of acquisition will be 2,40,000. Now comes JAM Limited. Guys, long-term capital asset. Can I please index the cost of acquisition? Can I please index the cost of acquisition? No, very good. Why can't I? Because 112A indexation benefit you don't get, right? So 112A, how to compute cost of acquisition? But see, listen to me carefully, okay? Pause. Patiently listen to me, very important. Under 112A, how do you compute cost of acquisition? You will first of all check what is the date of acquisition. Is the date of acquisition on or before 31st Jan 2018 or is the date of acquisition after 31st Jan 2018? Okay, if the date of acquisition is after 31st Jan 2018, you will take the actual cost of acquisition as it is, guys. But if the date of acquisition is on or before 31st Jan 18, now the drama calculation will apply, wherein you will take the actual cost of acquisition, you will take the FVC, you will take the FMV. FMV on which date? FMV on 31st Jan 2018. Okay, out of these two numbers, you will pick whichever is lesser. Out of these two numbers, you will pick whichever is higher. Okay, so this is how you compute cost of acquisition in 112 cases. Now come on, come back to this question and tell me, in this question, when did we acquire the shares? We acquired the shares on 16th April 2017, guys. 16th April 2017 means on or before 31st Jan 18, which means this calculation will apply. So what is the actual cost of acquisition? See, for how much did we actually acquire the shares? The actual cost of acquisition is 72 rupees. All right. And what is the FVC? We are selling away these shares for how much? For 100 rupees. And what is the FMV on 31st Jan 2018? 50 rupees. Now be careful. Out of these two numbers, you will pick whichever is lesser, which is lesser 50. Out of these two numbers, you will pick whichever is higher, which is higher 72. Understood, everybody? Yes. So what is my cost of acquisition, everybody? My cost of acquisition is going to be finally 72 rupees per share. So 1,250 shares into 72 rupees per share. This is going to be 90,000 rupees. All right. So what is my STCG under section 111A? Come on, do the math. Give me the net number. Give me the difference, please. You'll get 59,700 here and you'll get 34,875 over here. Now, this 34,875 is going to be your LTCG under section 112E. All right. Now, right now itself, will I think about the 1 lakh exemption of 112A? Right now itself, will I say, oh, up to 1 lakh, no tax? No, right now I will not talk about it. When will I talk about the 1 lakh exemption? Only when I do tax computation later. That time only I will say that, okay, up to 1 lakh, 112 no tax. All right, all perfectly clear. 34,875 is my 112A income. All right, with this we are done with this adjustment as well. Now come to your next adjustment, everybody. The question says he made payment of 90,000 rupees on 1st September 2023 via a check towards medical insurance as lump sum premium for himself and his wife till 31st August 2027. Now, of course, you know by now that this is going to be chapter 6A. Which section? Which section in chapter 6A? I'll open a separate working note for chapter 6A. Which section number, guys? Section 80D, right? Now listen to me carefully, okay? In section 80D, you have two categories, guys. You have number 1, family category, and then number 2, you have parents category, right, guys? In family category, you have self, spouse, and dependent children. In parents category, you have my parents. Whether dependent or not dependent does not matter. Now here, first of all, tell me, are we talking about family category or parents category? Question says himself and his wife. So which means we're talking about family category. Okay, how much premium is paid? 90,000 premium. This is lump sum premium. Extremely important adjustment. Listen to me carefully. This is lump sum premium. The payment was made on 1st September 2023, and this policy is till when? This policy is till 31st August 2027. Now check how many years are involved over here. We are saying 1st September 23 to 31st August 27. In this period, how many previous years are involved? 23, 24 is involved, 24, 25, 26, 20, 25, 26, 26, 27, and 27, 28. How many years? See, it's a 4 years policy, but I will not see how many years policy is it. I will see how many years are involved. This policy is touching upon which previous year? It is touching upon 5 previous years. So therefore, what's the premium? The premium is 90,000. That 90,000 divided by 5, how much is that going to be? 18,000 rupees. Okay, then he also made cash payment of 7,500 towards preventive health checkup for himself and wife. See, listen, section 80D says whatever amount you pay, you must make the payment in non-cash mode. Good, my assessee has made the payment of premium in check. So therefore, this will be considered. But preventive health checkup, section 80D says pay in whatever mode. Assessee has paid in cash. Is that a problem? That's not a problem. Preventive health checkup we can pay in any mode. We can also pay by cash mode. How much we paid? 7,500. But you know this adjustment very well. Tell me, preventive health checkup, max to max, how much will you allow? Max to max only 5,000 you will allow. So total 23,000, guys. 23,000 well within the limit of what? Come on, tell me. 23,000 well within the limit of? Well within the limit of 25,000. So therefore 23,000 fully I will allow. Yes, guys, and you know very well, if there was an element, if any person over here was senior citizen, the limit would have increased to what? You know it very well. Tell me, the limit would have increased to 50,000 rupees. All right, guys, perfect. Yes, so this was section 80D. Now comes this adjustment. This is the star adjustment of this question. Listen to me carefully, okay? He received royalty, guys, royalty of 2,88,000 from abroad. See, royalty income always goes to which head? First of all, royalty income always goes to your IFOS head. So I'll open a new head, IFOS, working note number 4, royalty income. Okay, I'll come back to my main answer. All right, here I'll put IFOS working note number 4. Now under IFOS, see how much royalty did we receive? We received royalty of 2,88,000 rupees. Okay, now continue reading from for a book author. So this is royalty relating to a book. Not only will it be taxed under IFOS, does something else also come to your mind? Something in chapter 6A, guys. Something in chapter 6. Amazing answers. Section 80QQB, guys. Yes, see, royalty relating to books, 80QQB. Royalty relating to patents, 80RRB. Okay, now see, the rate of royalty is 16% of value of books and expenditure. The rate of royalty is 16%. And the question is saying expenditure incurred for earning this royalty was 40,000. So net royalty is how much? The net royalty that my assessee has earned is 2,48,000. First of all, I will tax this net royalty under my IFOS head. Adjustment 1 over. First, my net royalty income, I will tax off under IFOS head. Now comes my ATQQB discussion. Okay, listen carefully. ATQQB says royalty relating to books. What's the total amount of royalty? I'll tell you step by step. What's the total amount of royalty? 2,88,000. So you will see what's the total amount of royalty. You will first restrict it to 15%. Then if this royalty is earned from outside India, we will see out of the royalty how much is realized in India within 30th September 2024. Same thing like what we saw in 10AA. You have to realize in India within 6 months from the end of the year. 6 months from the end of the year is 30th September 24. Okay. From this, we will subtract whatever expenses we have incurred. We will get the net number. This net number we will compare with maximum deduction. Tell me, in ATQQB, what is a maximum deduction in ATQQB? Maximum deduction is going to be 3 lakh rupees. Okay, guys, come on, let's apply all this. Total amount of royalty is how much? 2,88,000. But this is 16%, guys. First, I will restrict it to 15%. How will I restrict it to 15%? 2,88,000 into 15 by 16. Okay, so this is going to be 2,70,000, guys. Now from this, I will see how much was repatriated into India within 6 months from the end of the year. The question says amount remitted to India till 30th September 24 is 2,50,000. So how much is repatriated to India? How much is realized in India within 6 months from the end of the year? Only 2,50,000. Now from this, I will subtract my expense of 40,000. So what's my net number now? My net number is 2,10,000. This 2,10,000 I will compare with my maximum deduction of 3 lakhs. So tell me now, max to max, how much deduction I will get under ATQQB now? Under ATQQB, 2,10,000 is a deduction I will get. Is this understood? Yes. So I'll see the total amount of royalty. I will restrict it to 15%. Out of that, how much was repatriated into India within 6 months from the end of the year? And from that, I will subtract my expenses. I'll get the net number. This net number I will compare with the maximum limit of 3 lakh. And out of these, whichever is lesser, 2,10,000. All right. So this is it with our royalty adjustment. Rest of the question is very simple. The question says he received income tax refund of 15,750, including interest of 1,750. Income tax refund, nothing to do. But interest on income tax refund will go to which head? Come on, tell me. Interest on income tax refund will come to our IFOS head. So interest on income tax refund amount is 1,750 IFOS head. All right. Now comes my next adjustment. Look at the next one, everybody. The question says he occupies ground floor of his residential building and has let out the first floor of residential house. So he has a house property. All right. The ground floor is self-occupied and the first floor happens to be let out. The question says let out for a monthly rent of 15,000. He has paid municipal tax of 30,000 for the current financial year. So 30,000 municipal tax. Remember, municipal tax will be for the entire property. Both floors are of equal size. He has taken a loan from bank of 50 lakhs for the construction of this property in 2020 and has repaid 2,05,000 including interest 1 lakh during the year 23-24. Typical IFHP adjustment, guys. I'll come back to my main answer. I'll put IFHP over here. Let's say working note number 5. Okay. After my working note number 4, I'll open working note number 5, IFHP. I have two properties over here. I have let out property and I have self-occupied property. So how do we start? We'll start with GAV. Now in let out property, they have not given me municipal value, fair rent, standard rent and all. So I'll straight away use a shortcut. I'll take the actual rent minus unrealized rent minus vacancy loss. No unrealized rent, no vacancy loss. We only have actual rent over here. How much is the actual rent? 15,000. So 15,000 into 12, 1,80,000. Guys, remember, let out property, I will do the calculation for the period for which my assessee owns a property. Assessee owns a property for the entire year. So for the entire year, I am calculating. Less municipal taxes paid. We actually have to pay the municipal tax only on payment basis. I will get a deduction. How much municipal tax? 30,000. Can I take 30,000 fully? No. 30,000 is for the entire property. For the let out portion alone, I will take 15,000. So what is my net number, everybody? Net number is 1,65,000. This becomes my net annual value. Self-occupied property net annual value is 0. Less deductions under which section? Less deductions under section 24. First of all, you'll have standard deduction at what percentage? At 30%. So 1,65,000 into 30%, which is 49,500. 0 for self-occupied property. And lastly, interest on borrowed capital. As soon as we talk about interest on borrowed capital, immediately what comes to your mind? Immediately two things should come to your mind, guys. What are the two things? Current year interest and pre-construction interest. Do we have pre-construction interest in this question, everybody? Do we have pre-construction interest in this question? See, they have given us the date of construction completion. They did say construction of the property was completed in 2020, but they did not give us a date of borrowing. I will have pre-construction interest only if the date of borrowing is only the date of borrowing is before the date of construction completion. Pre-construction. So before construction itself, I should have borrowed the loan. So only if date of borrowing is before date of construction completion, I will have pre-construction interest. The question has not given me date has not given me date of borrowing. So no pre-construction interest, only current year interest. Question says we have repaid 2,05,000, including interest 1 lakh. So what is the balance? 1,05,000. Of course, balance 1,05,000 will be principal. So interest is 1 lakh. 1 lakh is for the entire property. So each floor is equal size. So therefore, ground floor how much? First floor how much? Did we lose connection in between? I hope not. Okay, so interest 50,000 here and 50,000 here. So therefore, the net number, you'll get 65,500 here and a negative 50,000 here. All right. 1 second. Looks like something's wrong with the network. Okay, in case, see, my Google Chrome is snapping. In case it goes off, somebody has to call me, okay? Only then will I know. Fine. All right. Why will I restrict it to 30,000, Alina? I will restrict to 30,000 only if the loan was borrowed before 1st April 1999. See, listen to me. When do I apply the 2 lakh limit? I will apply the 2 lakh limit if the loan is borrowed on or after 1st April 1999. Loan is borrowed for purchase or construction of the property, and purchase or construction should be completed within 5 years from the end of the year of borrowing. Now here, if you see, yes, loan is borrowed on or after 1st April 1999. Loan is borrowed for purchase or construction only. And let's say 5 years condition is also fulfilled. All my conditions are fulfilled. So the limit is going to be 2 lakh only, right? So why 50,000, right? So no 30,000 limit, 2 lakh limit only will apply here. All my conditions are fulfilled. All right. So therefore, 1 second. Oh God. 1 moment. It's getting stuck. So the self-occupied property total interest was 1 lakh. I split that 1 lakh into 50,000, 50,000. All right. So this is my income from house property from the let out portion and from the self-occupied portion. So what is my net IFHP now? 15,500 is my net IFHP. Those of you who are saying that we should not do for self-occupied property, that is only if I follow 115 BAC. Right now I'm doing without 115 BAC. So normal computations only I am doing over here. All right, so this is it about this particular point. Now come to the next adjustment. Let me show you the screen closed. Yeah. Are you able to see the question again? Able to see it now? Fine. Now come to the next adjustment. Mr. Anand deposited 1,30,000 in PPF. And by the way, we missed one adjustment. What about the balance principal adjustment? What about the balance principal adjustment? Principal of 1,05,000 we have, right? So that will go to section 80C. But you can put principal under section 80C only if some conditions are fulfilled. Condition number 1, it has to be residential house property assessed under IFHP, right? Condition number 2, the loan should be for purchase or construction. And condition number 3, who is the lender over here? The lender is bank. Is bank allowed? Yes, the lender bank allowed. Bank, financial institution, it can be National Housing Bank, it can be central government, it can be your employer. Lender has to be a specific person. So all my conditions are fulfilled. Therefore, section 80C, I will get a deduction principal 1,05,000. So I'll come back to my chapter 6A adjustment. Now under chapter 6A, I'll have section 80 CCE. Under 80 CCE, we'll have 3 sections: 80C, 80 triple C, and 80 CCD subsection 1. So how much is my principal repayment? Principal repayment is 1,05,000. All right, then our next adjustment. Mr. Anand deposited 1,30,000 in PPF and 80,000 in 5 years term deposit in the name of his minor son. See, Public Provident Fund PPF, even this will come to my ATC, 1,30,000. And what about 5 years term deposit? See, 5 years term deposit, 5 years fixed deposit, 5-year time deposit, 5 years tax saver deposit, all of these are same. It will come to section 80C. The deposit can be either in a bank or it can be in a post office, but it has to be in assessee's own name. Here it is in the name of assessee's son, and that is why I'm not going to give ATC deduction over here. You understood? Generally, 5 years term deposit, 5-year FD, all this generally does come under section ATC. But however, because it is in the name of minor son, that is why I will not give section ATC. That's it with the question, guys. Let's go ahead and close the adjustments one by one. Working note number 1, 10AA, we had already computed. Working note number 2, capital gains. Let's take these numbers to our main answer. So we have 111A. 111A STCG, how much? It is 59,700. And 112A LTCG also we have. We've done the computation. 34,875. All right. Then after this, IFOS, let's finish off chapter 6A. Chapter 6A, 80 D is 23,000. 80 QQB is 2,10,000. Here, if you see, we don't have 80 triple C, we don't have 80 CCD1. Total is how much? 1,05,000 plus 1,30,000. We have 2,35,000. This 2,35,000 we will restrict to how much? But we will restrict to 1,50,000. Right? So now if you add up, your total chapter 6A is going to be 3,83,000. Total chapter 6A, we'll remember to take this at the end. Then after this, IFOS, total IFOS is 2,49,750. 2,49,750. Finally, IFHP 15,500. Add up. What's your GTI? Do you get this number? 38,59,825. Yes, this is going to be your GTI. Do we get this number? Now, after this, what comes next? Can I straight away subtract 10AA? Can I straight away subtract chapter 6A? No, there's something that you should be doing before that. What is it? Before chapter 6A, before 10AA, there's something I should be doing. Very good. I should be splitting this into 2 parts, special rate income and normal rate income. Now, do I have special rate incomes? Yes. 111A and 112A, both of these are my special rate incomes, guys. So, total special rate income add up. Total special rate income is going to be 94,575, and my normal rate income is 37,65,250. Now from this, I will subtract 10AA. I'll give reference to working note 1. 10AA was 21 lakhs. The tax holiday computation we did. Then even chapter 6A we've computed already. Give reference to working note number 3. Total chapter 6A was how much? 3,83,000. All right, that's all. Find the net number, please. Special rate income 94,575. Normal rate income 12 lakh 82,250. So the total income of my assessee will be 13 lakh 76,825, which we should remember to round off. Right, guys? Which we should definitely remember to round off to what? To the nearest multiple of 10. So after rounding off, my total income will be 13 lakh 76,830. Now, they asked us not only to compute total income, they also asked us to compute tax liability and ignore AMT. So how do we compute tax? Let's finish off tax computation also. So what's my assessee's total income? I'll do the tax computation here. Total income is 13 lakhs 76,830. Basic exemption limit, guys. Assessee is not a senior citizen. Basic exemption limit will be 2,50,000. All right. So the total income of my assessee 13,76,830. I'll split this into three parts, guys. We have 111A STCG. We have 112A LTCG, and we have my normal rate income. So what is my 111A? 111A is 59,700. My 112A is 34,875. My normal rate income is a balance 12 lakh 82,250. Okay, this 112A, I'll round this off to 34,880. Now, 111A, if you see, this will be, before this, basic exemption limit, I will adjust first against what? Always first against normal rate income. So, I'll adjust it over here. So, I will not write the net number over here, because if I write the net number, there are chances of students making mistakes. When we write the net number, students end up giving basic exemption limit twice. So, we'll just show that we've utilized the basic exemption limit over here, and then we'll start computing basic tax. Okay, so normal rate, how will you compute tax? 12,82,250, guys. So you'll have to pay 1,12,500 plus 30% of the income in excess of 10 lakh. Do the math, please. You'll get 1,97,175 here. Okay, 111A, you will pay tax at what rate? At the rate of 15%. So 59,700 into 15%, 8,955. 112A, will you compute 10% tax? What will you say? It is within 1 lakh. Because it is within 1 lakh, you will say it's fully exempt, right? So total basic tax, if you see, 197,175 plus 8,955, this is going to be 206,130. Okay, now tell me, do we have any surcharge over here? Will we have any surcharge? No, because income is within 50 lakhs. And will we have any cess? Cess we will anyways have in each case. So cess at the rate of 4%. So after adding cess, it's going to be 214,375, which we will round off to 214,380. All right, 214,380. Now listen to me. Here they asked us to ignore AMT. But had they not said that, we would have thought about AMT, because we have 10AA. Right, guys? When do we think about AMT? We think about AMT if my assessee has either section 10AA, or my assessee has section 35 AD, or my assessee has chapter 6A part C. Chapter 6A part C, which how many sections do you have in chapter 6A part C? 3 sections. You have 80 JJAA, you have 80 QQB, and you have 80 RRB. So in this question, they told us to ignore AMT. But had they asked us not, had they not said that, we would have done AMT calculation, because we have 10AA also, we have 80 QQB also. So we would have thought about AMT as well. But here, no need to think about AMT, because they've asked us to ignore AMT. Got it, guys? AMT percentage, can you tell me? AMT, what's a AMT percentage? I'm going to literally wait for your answer in the chat box. AMT percentage, please. At what rate? You will find adjusted total income first for the purpose of AMT. How will you find the total income number? The total income, you will add back 10AA. You will add back chapter 6A part C. You will add back 3580. On 3580 asset, you will subtract depreciation. You will get the net total income number. That total income number into 18.5% will become your AMT, right? So you pay your normal tax or AMT tax, whichever is, which of the two do you pay, normal or AMT, whichever is higher. Okay, so this is it about my computation without 115 BAC. Now the same thing I have to again do with 115 BAC. But do I have to recompute the entire thing all over again? No, I will straight away take my total income number. I will add, subtract, I will make some adjustments, and I will arrive at the 115 BAC number. So what's the total income number over here? Total income is 13,76,820. 25. I'll take it before rounding off. Okay, before rounding off 13,76,825. Please remember that this number does include 111A and 112A. This number has 111A also. This number has 112A also. 111A of how much? 59,700 and 112A of 34,875. Okay, why am I making a note of this? Because even under 115 BAC, special rate income will still be taxed at special rate. Okay, now tell me, what are all the adjustments which I have to reverse for 115 BAC? We'll go one by one. PGBP nothing to reverse, capital gains nothing to reverse, IFO is also nothing. But IFHP, we did self-occupied property. Remember, self-occupied property 50,000 interest we had given. If my assessee is following 115 BAC for self-occupied property, no interest deduction. I'll repeat again. If assessee is following 115 BAC, let-out property, no change. Self-occupied property, no interest deduction. So this 50,000 I'll reverse, guys. Yes, so self-occupied property interest 50,000 I'll reverse. What else, guys? What else? So GTI, special rate, normal rate, 10 AA I'll reverse. 10 AA 21 lakhs. So 10 AA we cannot enjoy if assessee is following 115 BAC. Then tell me, in chapter 6A, in 115 BAC, we can enjoy 3 sections in chapter 6A. Which 3 sections? 80 JJAA, then 80 CCD subsection 2 and 80 CCH subsection 2. In this question, we don't have any of these. So therefore, chapter 6A as it is, we will reverse fully. So how much is a chapter 6A? 3,83,000. Even this we will reverse fully. So now tell me, what is the final income for the purpose of 115 BAC? You will be getting 39,09,825, which we will round off to 39,09,830. All right. Yes, so now what are we left with? We're only left with computing tax under 115 BAC. Now under 115 BAC, if my income is up to 15 lakhs, I'll anyways have to pay 1,50,000. Yes, plus 30% of my income in excess of 15 lakhs, right? The basic tax computation I'm saying, up to 15 lakhs, you anyways have to pay 1,50,000 plus 30% of assessee's income in excess of 15 lakhs. Keep this in mind, and now let's begin. See, total income of the assessee is what? 39,09,830. This will have 3 parts. First of all, we'll have 111A, we have 112A, and we have normal rate. So 111A is how much? 111A is 59,700, 112A is 34,875. And what about the normal rate? The balance, what is the balance number? Do the math, please. 39,09,830 minus 59,700 minus 34,875, you will get 38,15,255. Okay, now against this basic exemption limit, how much will I have? Tell me the amount first. Basic exemption limit 3 lakh, guys, because 115 BAC. Under 115 BAC, whether assessee senior citizen, non-senior citizen, doesn't matter. Basic exemption limit is 3 lakhs. I'll adjust it against normal rate income. Right, guys? Now tell me, 111A, how will I compute tax? At the rate of 15%, same 15%, guys, which is 8,955. 112A, even here I will say no tax because it is within 1 lakh, therefore fully exempt. Normal rate, how will I compute tax? Up to 15 lakhs, I anyways have to pay 1,50,000 plus 30% of my normal rate income in excess of 15 lakhs. So do the math. How much do you get? You will get over here 8,44,577. Yes. So now if you add up, the total basic tax is going to be 8,53,532. No 87A rebate because income is more than 7 lakh. No surcharge because income is within 50 lakhs. So straight away, you will add cess at 4%. So after adding cess, it's going to be 88,76,73, which you will round off to 88,76,70. You understood? Yes, we spent quite some time in this question because this question has a lot of adjustments and generally students are a little underconfident about 115 BSc. So I wanted to do this as our very first question so that 115 BSc is not a problem for you at all in the examination. All clear? Yes, you can use this shortcut. You can do it this way. It is allowed. Up to 15 lakhs, you anyways have to pay 1,50,000. Above 15 lakhs, whatever is your excess income on that 30%. Yes, come on, give me a quick response in the chat box. Are we all crystal clear with our entire discussion until here? Yes, guys. So what were our learnings through this question? Our major learning here was section 10AA. Capital gains was an easy adjustment. We got a good revision of section 112A. 80D lump sum adjustment, a very important adjustment. Guys, trust me when I say this, every 2 exams, there is this adjustment in the examination. Either it will be in the form of an MCQ or it will be a part of your total income question. Be well prepared for this. All right. Royalty was another very good adjustment we covered through this question. And then finally, IFHP. Remember, if my SSC is following 115 BSc, letter property, no impact. The impact will be only under self-occupied property. Self-occupied property, you will not get the interest deduction. All right, guys. So with this, I think we're good to close this question. Can we go to another total income question? Yes, yes, guys, we're going to work out one after the other total income questions in this session now, because are you noticing in one total income question itself, so many small adjustments are getting automatically covered, right? Now, ATQQB can be a part of any other question also. 10AA can be a part of your MCQ as well. So therefore, when we do one total income question, multiple adjustments get covered. I hope you are feeling at least little better, all right, with 10AA and 115 BSc, these two, and 80 QQB. All right, now come on, let's come to the second question, everybody. Let's do this as nicely as we can. Even this is a September 2024 question only, a mock test paper question. All right, let's read the question first. The question says, Mr. Ayush, a resident individual, aged 54 years. So what will my mind voice say? My mind voice says, okay, 54 years, which means my SSC is not a senior citizen. He's engaged in the business of manufacturing. As soon as I see manufacturing, what comes to my mind? In our CA intermediate syllabus, if SSC is into manufacturing business, only one extra adjustment, and that is additional depreciation. Okay. He earned a profit of 82,45,000 as per the P&L account after debiting and crediting the following items. So these 4 items are debited and credited, and our net profit is 82,45,000. Okay, they've given us a lot of information. What are they asking us? Compute total income and tax payable. In the last question, they had asked us for tax liability. So we did not consider TDS, TCS credit. We did not consider advanced tax and all. Here they're asking us tax payable. So I will consider TDS, TCS credit. I will consider advanced tax. All right. So compute total income and tax payable by Mr. Ayush for assessment year 24-25, assuming he has shifted out of the default tax regime. So shifted out of the default tax regime indicates what? Indicates my assessee is not going to follow 115 BSE. See, listen, if they say do as per normal provisions, or if they say do as per regular provisions, or if they say assessee has opted out of 115 BSc, or if they say assessee has opted for the optional regime, all of this indicates that we are supposed to do without section 115 BSc. All right, everybody. Yes, so total income and tax payable. Come on, let's begin. So let's do the total income computation first. And this is without section 115 BSc. Listen to me now. The question says very clearly over here, we have earned profit of 82,45,000. So which itself indicates, first of all, my assessee has PGBP. So PGBP, I'll give reference to working note number 1. I'll open working note number 1 for PGBP. All right, now see, we have the net profit number. So how are we going to compute PGBP? Are we going to do the 5 steps or are we going to do the 2 steps? Basically, direct, indirect method. Some of you learn it that way. I generally call it as 5 steps and 2 steps. So we will be following the indirect method over here. That is, we will be following the 5 steps approach. Why? Because we have the net profit number. Okay, so net profit number we have, therefore we will do the 5 steps number, that is add expenses debited but not allowed, add incomes not credited but taxable, less expenses not debited but allowed, less incomes credited but not taxable. Those 5 steps are what we will do over here. Many of you learn it as indirect method generally, okay? But here I'm not focusing too much on presentation today. I'm straight away doing the steps here itself, one after the other. All right, look at this now. He earned profit of 82,45,000 as per P&L account after debiting and crediting the following items. So depreciation of 15,40,000 is already debited. Let's assume this is as per Income Tax Act, nothing to do. STCG on transfer of listed equity shares, STT is paid 10 lakhs. This is also credited. So what will we do with this credit? We'll have to remove this, guys. We'll have to remove this STCG because we'll have to take it to the capital gains head instead. So 10 lakh rupees, I'll remove this from here and instead I'll take it to capital gains head. So I'll come back to my main answer, STCG section 111A. Why am I calling it 111A STCG? Because listed equity shares, STT is paid. So of course, 111A amount is 10 lakh rupees. All right, guys. Now come to the next adjustment. He received income tax refund of 15,550. Guys, this is credited. So you'll have to remove this credit. No, income tax refund will not be taxable in PGBP. Income tax refund 15,550. I'll remove this from PGBP. But listen, will income tax refund be taxable under any other head? Income tax refund is not taxable under any other head, but interest on income tax refund, this will go to which head? Interest will go to IFOS head. So I'll come to my main answer, IFOS. I'll give reference to working note number 2. After working note number 1, I'll open working note number 2, IFOS. Here we have interest on income tax refund. What is the amount? 4,550. Okay. Then dividend income from Indian companies 15 lakhs. Dividend received from each company is less than 5,000. Dividend income 15 lakhs. It is credited to P&L account, guys. So what will I do now? I'll have to remove this from PGBP, right? So I'll again subtract the dividend amount, how much? 15 lakh rupees. And then the question says, be very careful. And by the way, I'll take it to IFOS, dividend 15 lakh rupees. Be very careful. The question says, dividend received from each company is less than 5,000. Why have they given us this information? Listen, section 194. TDS on dividend. Section 194 says if the dividend amount is more than 5,000 rupees, then TDS will apply at what rate? Come on, tell me the rate of TDS. TDS will apply at the rate of 10%, guys. It can be 222A, B, C, D, E. Doesn't matter. It can be any kind of dividend. If it is more than 5,000, then the TDS at the rate of 10% will apply. Yes, guys, they are saying each company, the dividend received from each company is less than 5,000. So because it is less than 5,000, will we have any TDS credit over here with respect to dividend? We will have no TDS credit over here with respect to dividend. Are you getting the point? We will have TDS credit with respect to dividend under section 194 only if the TDS amount is more than 10,000, more than 5,000, guys. Here, because the TDS amount, because the dividend amount is less than 5,000. That is why there will be no TDS credit. All right. So no TDS credit. You got the point? Only if it is more than 5,000, they will deduct tax. Question says it is each company is paying less than 5,000. So because it is less than 5,000, there will be no TDS credit. Now come to the next adjustment. Now this is a very interesting adjustment. These two adjustments. Listen now. Mr. Ayush installed a new plant and machinery for 65 lakhs on 1st October 23, which was put to use on 1st Jan 24. So guys, listen, put to use on 1st Jan 24, definitely put to use for less than 180 days. So therefore, we will get only half year's depreciation first of all. Everybody agrees? We put the asset to use for less than 180 days. So therefore, we will get only half year's depreciation. Question says depreciation including additional depreciation on this amount of 65 lakhs is included in the depreciation debited to P&L. So they're saying depreciation is already debited to the P&L. So is there anything left for me to do over here? Nothing. Depreciation and additional depreciation already debited, they are saying. Now look at the next adjustment. Mr. Ayush took a loan from SBI of 50 lakh rupees on 1st September 23 at 10.5% per annum to purchase such plant and machinery. Total interest up to 31st March 24 has been paid on 31st March 24 and the same has been debited to P&L account. Now, do you remember learning whatever interest we incur till we put the asset to use will be capitalized, guys? Whatever interest we incur till the asset is put to use should be added to the actual cost of the asset. It should be capitalized. So, but then here what did they say? Here they say that total interest has been debited to P&L account. So we'll have to do the adjustment over here. We'll go step by step. What is a total interest? First of all, calculate the total interest. Amount of loan is how much? 50 lakh rupees. 50 lakh rupees is the loan. What is the interest rate? 10.5% is the interest rate. Loan was taken on 1st September. September, October, November, December, Jan, Feb, March for 7 months. So the total interest will be how much that we have incurred? Total interest is going to be 3,06,250, guys. Yes, September, October, November, December, Jan, Feb, March, 7 months. 7 months interest, 10.5% on 50 lakh, 3,06,250. Okay. Now, out of this, how much interest should be capitalized? See, from 1st September 23 to 31st December 23, I have to capitalize. Why? Because the asset was put to use on 1st January 24. So, 1st January 24 to 31st March 24, for this period, whatever interest I have incurred, this I can put into P&L account. But before the asset is put to use, before that, whatever interest I have incurred, that interest has to be capitalized. Right, guys? So this is going to be for how many months? September, October, November, December. 4 months here and 3 months here. So do the proportionate calculation. 3,06,250 into 4 by 7. 3,06,250 into 3 by 7. Do the math. 4 by 7 will be 1,75,000. And here you will have 1,31,250. Understanding? Now listen carefully. What will I do with this 1,75,000, guys? This should be capitalized. But they're saying it is fully debited to P&L account. This part should be debited to P&L and it is already debited. Nothing for me to do. But this part they have debited, but it should have been capitalized instead. So I'll have to reverse the debit. How will you reverse the debit, guys? You'll reverse the debit by adding it back. So I'll add back the interest. Interest of how much? 1,75,000. This interest is relating to the capitalization part. It should not be debited, but it has been debited. I'll reverse the debit by adding it. I'll add back the 1,75,000. But because I capitalized on this portion, what I can claim? I capitalized this. I added this to the actual cost. So therefore, on this part, I will claim depreciation. Yes, common mistakes possible over here, I'll tell you. Students will remember to capitalize, but they will forget to claim depreciation. Guys, capitalize means what? I am adding it to the block. No, if I'm adding it to the block, I can claim depreciation. So on this 1,75,000, I will claim depreciation, guys. How much depreciation? See, I'll have normal depreciation also. I'll have additional depreciation also. Normal depreciation 1,75,000 into 15% into 1 by 2 because less than 180 days. Additional depreciation will be 1,75,000 into 10%. Generally, additional depreciation is 20%, but because less than 180 days, that's why 10%. So come on, do the math. How much does this work out to? 1,75,000 into 15% divided by 2. You will get 13,125 and 17,500. So total depreciation which you have to extra give now, 30,625. Very good adjustment, guys. Did you pay attention? Yes, you've registered this in your memory. Same thing comes in the exam. Very nicely, you should be able to handle without any worry. Yes, depreciation 30,625. You understood? No. Whatever interest I have incurred till I put the asset to use, I will capitalize. I will add it to the actual cost. Okay. Now, after I add it to the actual cost, obviously on that part, I will get depreciation. But because asset is put to use for less than 180 days, I will get only half year depreciation. That's all. Now listen, advance tax paid during the year 17,50,000. Why have they given me this information, guys? When I compute tax payable, that time I will take this as credit. Okay. Then the question says, Ayush purchased goods for 30 lakhs from Mr. Ram, his brother. The market value of the goods is 35 lakhs. See, assessee has incurred an expense. The expense is 40 lakh rupees, but the reasonable value, the market value is 35 lakh rupees, which means my assessee has incurred an expense, that expense is excess or that expense is unreasonable. And who is the other party, guys? The other party is his brother. Brother will come under relative. Which section am I talking about? I am talking about section 48.2. 48.2 says, if assessee incurs an expense and if that expense is excess or unreasonable, and if the other party is relative, then whatever is the excess or unreasonable portion, I will disallow. So what is the excess or unreasonable portion over here? 5 lakhs. This 5 lakhs I will disallow. Just for your information, who is relative for section 48.2? Be careful. Relative, this diagram should come to your mind. For the purpose of section 48.2, relative means my brother, my sister, my lineal ascendants, my lineal descendants, and my spouse. Okay? Many a times in the examination, they will give an expense, excess expense, but they will say brother-in-law. Is spouse's brother covered? Is brother-in-law covered? No. So be careful. Just because you see excess or unreasonable, don't straight away disallow. First check, is the other party relative or not? Here brother. Yes, brother is relative. So therefore 5 lakhs I will disallow. So I'll add back under section 40A subsection 2. What is the amount? 5 lakhs. This 5 lakhs I'll add back. Okay. Then the question says he paid 40,000 as life insurance premium taken on the life of his married daughter who is not dependent on him. Life insurance premium, guys, section 80C will come to your mind. So the life insurance premium 80C you can pay for self, spouse and children. Children, dependent, independent, married, unmarried, minor, major, doesn't matter. All children covered over here. So what is the amount of premium? 40,000. Policy was taken on 1st April 2016. Policy was taken on or after 1st April 2012. Therefore, maximum premium, how much you will allow? Maximum 10% of sum assured you will allow. Sum assured is 5 lakhs. So 10% is going to be 50,000. We have paid 40,000 within 50,000. So 40,000 fully will be allowed. So I'll open another working note over here. Working note number 3 for chapter 6A. We have ATC. ATC will go under section ATCCE. So under section ATCCE, I'll have 3 sections: ATC, ATCCC and ATCCD subsection 1. Okay, now here we have life insurance premium. What is the amount? Amount is 40,000 fully allowed. Now come to the next adjustment. He paid 45,000 by check towards health insurance policy covering himself, his spouse and his children. Just now what did we learn, guys? Last question only. ATD. Come on, tell me. Check, is it allowed? Yes. ATD says irrespective of the amount, make the payment in non-cash mode. Yes, we've made the payment in non-cash mode. Self, spouse and children. Let's assume that they are dependent children. Self, spouse, dependent children. Which category it will come under? Family category, guys. Amount is 45,000. Nobody is a senior citizen here, so you will restrict it to 25,000. So we have section 80D. Amount of 80D here is actually 45,000, but we will restrict it to 25,000. Then the question says, Mr. Ayush withdrew 1.5 crores in cash from 3 current accounts maintained by him with SBI. There are no other withdrawals during the year. He regularly files his return of income. Guys, tell me which section comes to your mind over here for TDS. Section, come on, section 194N, guys. 194N says, if you're going to withdraw cash more than 1 crore, then what is the excess? Tell me. Excess is 50 lakhs. On the excess, we will deduct tax at 2%, guys. Yes, listen, in your entire TDS sections I'm talking about, only 194N and 194Q, only these 2 sections talk about excess. Okay, so here 194N is applicable because cash withdrawal. So more than 1 crore I am withdrawing. More than 1 crore, the excess is 50 lakh. On that excess 50 lakh, 2% TDS. That's going to be how much? 1 lakh. So I will have TDS credit of 1 lakh. Why have they said assessee is filing his return of income regularly? Do you remember this? If assessee did not file his return of income 3 years, you remember, you will ignore the immediately. See, I'll explain this point to you. It's important. Listen to me. previous year 23, 24, guys. Ignore the immediately preceding previous year 22, 23. Ignore this. See 3 years before that. That is 21, 22, 20, 21, 19, 20. These 3 years, assessee should file ITR properly. If he has filed ITR properly, he is not a defaulter. If he is not a defaulter, then up to 1 crore, no TDS. If he withdraws more than 1 crore, whatever is the excess, on that excess 2%. Okay. But out of these years, even 1 year if he is not filing ITR, out of these years, all the 3 years if he is not filing ITR, see, even 1 year if he files, not a problem. He did not file all the 3 years, then he will become a defaulter. I'm getting reminded, workout, if any workout batch students are over here, do you remember defaulter max? In Tony's language, defaulter max. Yes, guys. So if all the three years ITR is not filed, you'll become a defaulter. So once you become a defaulter, then up to 20 lakhs, no TDS. 20 lakhs to 1 crore, how much TDS? 2% of the excess. And above 1 crore, how much TDS? Above 1 crore, 5% of the excess. Are you clear with this? Yes. So here the question is saying assessee has properly filed ITR. So if all the 3 years assessee had not filed ITR, then in that case, this is how we would have computed. But because assessee has properly filed ITR, he is not a defaulter. And because he is not a defaulter, therefore, I'll see the excess above 1 crore, on net excess 2%. Okay, so this will be my TDS credit. All right, now come guys, come to the next. That's all with the adjustments. We just have to go ahead and close. Come on to find out the net PGBP. Add, subtract. Help me with the maths, please. Do you get this number? 63 lakhs 73,825. Take this to the main answer. Okay. Then IFOS add up 15 lakhs 4,550. Bring this also to the main answer, 15 lakh 4,550. That's all. Add up. What's your GTI? GTI will be 88 lakhs 78,375. I do have chapter 6A, but before chapter 6A, split, because again you have special rate income over here, right? So you'll split this into 2 parts. Special rate income, normal rate income. Special rate income, I have 10 lakh rupees. Normal rate income is a balance 78,375. I do have chapter 6A. Give reference to working note number 3. Now, if you look at working note number 3, like 80 CCE, only 40,000 we have, which is within the limit of 1,50,000. So my total chapter 6A here is going to be 65,000. All right, we'll subtract this only against normal rate income. So could you please find the net numbers now? Special rate income will be as it is. Normal rate number would be 78 lakhs 13,375. So if you add up, the total income of the assessee is 88 lakh 13,375. Please don't forget to round it off. I'll round this off to 88 lakh 13,380. Okay, now come on everybody, let's do our tax computation. How to do? Normal, nothing to worry over here. See, what's my total income? 88 lakh 13,380. Okay, I'll split this into 111A and normal rate. 111A is how much? 10 lakhs. Normal rate 78 lakh 13,380. Now basic exemption limit is how much? 2 lakh 50. Not a senior citizen, guys. 2 lakh 50 I'll subtract against normal rate income. Nothing is left to be adjusted over here. That's all. Start computing tax now. 111A normal 15%. So 10 lakh into 15%, 1 lakh 50,000 here. Normal rate income, how will you compute? Normal provisions only. Up to 10 lakh you anyways have to pay 1,12,500 plus 30% of the income in excess of 10 lakh. Do the math, please. you will get 21,56,514. So total basic tax is going to be 23,06,514. Now, will I have 87A rebate? No, because income is more than 5 lakhs. Will I have surcharge? Yes, because income is more than 50 lakhs. More than 50 lakhs up to 1 crore, surcharge rate is going to be 10%. So that's going to be 230,651. No marginal relief because income is far away from 50 lakhs. So straight away we'll add cess. So after adding cess, my tax is going to be 26,38,652, guys. But not just the tax number, they also asked us to compute tax payable. So I will subtract my TDS credit. Remember, we calculated and we kept it ready. 194 N TDS credit of 1 lakh we have. And we also had advance tax of 17,50,000. So what's a tax payable now? Tax payable would be 78,86,52, which we will round off to 78,86,50. All clear? Yes, this was a second total income question. Normal provisions, but good adjustments we saw over here. The best adjustment we saw over here was our depreciation adjustment. You understood what we did? Whatever interest we incurred till we put the asset to use, that entire interest we capitalized. And because we capitalized on that, we enjoyed depreciation. Okay, everybody, 194N also good revision you've had. See, a lot of provisions from whatever we're discussing now, you will find them in the question paper. As soon as you see them in those first 15 minutes, you should be filled with confidence. See, the best trick to solve your tax paper nicely is to walk into the examination hall with confidence. If you walk into the examination hall with fear, there itself, you've sort of given up a little bit. So when you walk into the examination hall, walk in with nice confidence that you're going to ace the paper very, very nicely. You get my point? So if you are able to eliminate the fear, all right, there itself, you've won the job. You get my point? So go in confidently. I bet you guys so many of these adjustments as it is you're going to find in your question paper. First 15 minutes when you read the question paper, you will feel, oh, I know this. And that itself will give you so much confidence, guys. That is what we are aiming for. All right, come on, let's go to the next question, everybody. Can we do question number 1 second? I'll tell you which question. There was one more total income question which I had spotted for you. Yeah, look at this. This one. This is another mock test paper 2 total income question. This is the last total income question, and after this, I want to discuss some small questions with you. All right, let's take this up, everybody. Are we ready? Come on. Question number 6. Another interesting total income question. Last total income question, guys, and after this, we'll do some smaller problems. All right, look at the question. The question says, Miss Farah, aged 40 years, she is an advocate. Guys, advocate, lawyer. This itself indicates my assessee is carrying on a specified profession. So because my assessee is carrying on a specified professional, I will think about presumptive taxation under section 44 ADA, guys. But I will think about presumptive taxation under 44 ADA only if the gross receipts are within 50 lakh, 75 lakhs, two numbers you have in 44 ADA, generally 50 lakhs. But if cash receipts are within 5% of the total receipts, then 75 of, if the cash receipts are within 5% of the gross receipts, then 75 lakhs. But here if you see the receipts are 81 lakhs, which is more than 50 lakh also, more than 75 lakh also. So therefore definitely no 44 ADA, no presumptive taxation, normal computation only. She keeps her books of accounts on accrual basis. Keep this in mind, accrual basis. So therefore we will allow expenses when she incurs. Whether she pays or not doesn't matter. We will tax incomes when she earns. Whether she receives or not doesn't matter. P&L account they have given to us. You understood this part, right? She's specified professional. I will think about 44 ADA. But 44 ADA presumptive taxation I can apply only if the gross receipts are within 50 lakh or 75 lakhs as the case may be. But here her gross receipts are 81 lakhs, which is much more than both. So therefore 44 ADA limits are breached. Therefore 44 ADA will not apply. Okay, you know when to apply 50 lakh, when to apply 75 lakh. 75 lakh limit you apply if the cash receipts are within 5% of the gross receipts. Okay, otherwise the general limit is 50 lakhs. Now, what are they asking us? Usual method of computation. What are they asking us? Compute total income and net tax payable as per the most beneficial taxation scheme. You're understanding? As per the most beneficial manner. See, different kinds of questions we've done. First question, they clearly told 115 BAC also, normal also. Second question, they said ignore 115 BAC. Now they are saying manner most beneficial. Most beneficial means what? Will compute as per normal. We'll compute as per 115 BAC. We'll see which is lesser. Okay. But did you notice tax payable, not tax liability, tax payable. So I'll have to be careful about TDS credit, TCS credit, advanced tax, all that also. I'll have to be careful. Very good question, guys. Good number of adjustments will get covered for you through this one. Come on, let's begin. So the question is asking us to compute total income and tax payable. So I'll do the total income computation first. First, I'm doing without 115 BAC. Okay. Let's begin. So what does the question say? The question says, they've given us a P&L account. They've given us a net profit number. So of course, my assessee does have PGBP. So PGBP, I'll give reference to working note number 1. I'll open working note number 1, PGBP. Now see, here again, I do have the net profit number. So how will I compute PGBP? Because I have the net profit number, I will compute PGBP using my 5 steps, guys. Okay, so let's begin without 115 BAC. Normal usual computation I'll do first. All right, listen. What's the net profit number? 25 lakhs, 91,000. Usual 5 steps. Indirect method. Come to the P&L. Fee earned, nothing to do. Dividend from Indian company. I'll remove 11 lakhs from PGBP. Dividend. I'll take it to IFOS head. IFOS working note 2. After working note 1, I'll open working note 2 IFOS. Here we have dividend income. What is the amount? 11 lakhs. Now see, they are saying gross. So what are they trying to indicate towards us? They're trying to indicate to think about TDS. See, the dividend amount is 11 lakhs, guys. Just now I told you, which section will I think about for dividend TDS? Section 194. The amount is more than 5,000. So definitely they would have deducted tax. At what rate they would have deducted tax? 10%, guys. So what's your TDS credit now? 1,10,000. This will become your section 194 TDS credit. All right. So section 194, why am I thinking about 194? Because it is dividend. In the earlier question, they told us a dividend is less than 5,000. Therefore, we did not compute TDS. But here they did not say anything. So total dividend amount is more than 5,000. Therefore, 10% TDS under section 194 will apply. So my TDS credit is going to be 1,10,000. Then the question says interest on deposit certificates issued under gold monetization scheme, 25,000. First of all, I will remove this from my PGBP, guys. So less interest gold monetization scheme amount is 25,000. I will take it to which head? I will take it to IFOS head, but under IFOS head, this interest is going to be fully exempt. Okay, so interest on deposit certificates issued under gold monetization scheme fully exempt under which head? Under IFOS head. Then we have honorarium 50,000 rupees. Again, I'll remove this from PGBP first. So less honorarium 50,000. I'll remove it from PGBP head and I'll take it to the IFOS head. How much is the amount? The amount is 50,000 rupees. Alright, then rent received in respect of house property. Again from PGBP head, I will remove this rent. Amount is 90,000 and rent received, which itself indicates we have IFHP head. So we have IFHP, but IFHP I'll give reference to working note 3, but I will not start the computation right now because I don't know whether there is municipal value, fair and standard rent. I don't know all that right now. I only have the rent received number. So I'll keep this pending for now. We have to do IFHP later. I've at least opened the working note and I've kept it ready. I will not forget to do this later. Okay. Now come to the debit side. Staff salary, nothing to do. Rent, admin expenses, all of these are my business expenses, nothing to do. Incentives, meetings, seminars, conferences, nothing to do. All these are my business expenses. But look at the next one. Purchase of car for official use on 1st September 23. Guys, car. Can we debit car to P&L? No, I'll have to reverse it. I'll have to add back the car adjustment. How much is it? It is 3 lakh. I'm adding it back because it is a capital expense. Instead, what will I claim on the car? Depreciation I will claim. Okay. So 3 lakh into depreciation rate will be 15% into. See, the car was purchased on 1st July 23. Let's say it's put to use on the same date. So if it is purchased on 1st July, let's say put to use on same 1st July, definitely this is at least 180 days. So I will get full year's depreciation, guys. So 3 lakh into 15%, 45,000 will become my depreciation amount. Then the question says repair and maintenance of car, business expense allowed, travel expense allowed, municipal tax. Municipal tax is relating to my house property. It will go into IFHP head. So in PGBP head, I'll have to reverse the municipal tax. What is the amount? The amount is 9,000. Why did I highlight it here? Because when I do IFHP, I'll have to remember to take this number. Till here, okay? Yes, everybody. So this was our discussion of the P&L. Now come to the other information. The question says admin expenses includes 50,000 paid to tax consultant in cash for assisting Miss Farah in one of the professional assignments. So what has happened over here? We have paid more than 10,000 in cash, guys, which means we have paid more than 10,000 in non-specified mode. Which section comes to your mind? Section 40A subsection 3. So we've paid more than 10,000 in non-specified mode. Under section 48.3, I will disallow the amount. See, I will not disallow just the excess. I will disallow the entire 50,000. So under section 48.3, if I pay an expense more than 10,000, if I pay an expense in non-specified mode, if I pay, I'll disallow the entire expense. So what is the amount, everybody? 50,000 fully disallowed. So in my PGBP computation, I'll add back section 40A3. I'll add back 50,000. All right, now come to the next adjustment. Traveling expenses include expenditure incurred on foreign professional tour of 50,000, which was within the RBI norms. It's a professional tour. It's an expense which is connected to my assessee's business or profession. It is a business expense, professional expense, nothing to do about it. Already debited in the P&L, nothing to do about it. Then the question says, Miss Farah paid medical insurance premium for her parents. Again, as soon as you see medical insurance premium, what comes to your mind? Section 80D, guys. And this is parents category. Remember, we had two categories, family and parents. This is parents category. Parents are senior citizens, whether dependent or not dependent, I don't care. 80D covers my parents, whether dependent or not dependent, doesn't matter. Okay, so senior citizens, therefore, what will be the limit under 80D? Generally, 80D limit is 25,000. But because senior citizen, the limit will be 50,000. She made the payment online, which means she made the payment in non-cash mode, guys. 80D says, irrespective of the amount, make the payment in non-cash mode. Yes, she's made the payment online, which means non-cash mode. 47,000 within 50,000. So 47,000 fully allowed. Then the question says, she paid 8,500 by cash towards preventive health checkup for herself and spouse. See, 47,000 was for parents category. Okay, then for family category means what? Self, spouse and dependent children. We have 8,500 preventive health checkup cash. The cash is not a problem. Preventive health checkup can be any mode. But 8,500, I will restrict it to 5,000. So what's a total 80D deduction, guys? Total 80D deduction is going to be 52,000. Are we all following? Total 80D. So I'll open another working note number 4 for chapter 6A. All right, here we have section 80D. Amount of section 80D is 52,000. How 52,000? 47,000 for parents and 5,000 preventive health checkup. Okay, guys, now come to the next adjustment. This is another interesting adjustment. Repairs and maintenance of car is for the period from 1st October to 30th September. So this is 1st October 23 to 30th September 24. Next year. So I will consider only current year expenses, no? So 1st October 23 to 31st March 24. This is going to be current year expense. So total repair and maintenance 35,000. This is paid for 1 year, but current year I have only 6 months in this period. So repairs and maintenance only 6 by 12 I will allow. So 35,000 into 6 by 12, only 17,500 I will allow. Balance 17,500 I will disallow. You're understanding? See, this expense I have incurred for 1st October 23 to 30th September 24. So half is current year, half is next year. But I will allow only current year expense. Current year only 6 months I will allow. So 17,500 I will allow. The balance 17,500 now I will disallow. Next year you can enjoy that balance 17,500. Okay, you got it? Current year expense only I will allow. Then last adjustment. No, not, yeah, last adjustment. She paid 1 lakh towards advanced tax. What will I do with this 1 lakh when I compute tax payable? That time I will consider this as my tax credit. She's paying advanced tax. Okay, that's it with the adjustments, guys. Let's go ahead. Let's close. Working note number 1, add, subtract, and help me find the net PGBP number, please. Do you get 16,57,500 PGBP? Okay. Then IFOS add up, please. You'll get 11,50,000 here. Now, IFHP is what we are left with. Let out property, guys. We had rental income. No municipal value, no fair rent, no standard rent. I can straight away start computing GAV. Shortcut I'll use. Actual rent minus unrealized rent minus vacancy loss. No unrealized rent, no vacancy loss. So rent received as it is becomes my GAV. Less municipal taxes paid. How much municipal tax paid? 9,000 rupees. So my net annual value will be 81,000. From this, I will subtract standard deduction at what percentage? 30%. That's going to be 24,300. No interest. Okay. So our net number 56,700. This becomes our IFHP. Let out property, guys. 56,700. So if you add up the GTI of your assessee is going to be 28,64,200. Do I have to split? Not required because no special rate income. So straight away I'll subtract chapter 6A. Working note 4. We have only one number over here, which is 52,080D. That's all. Very simple. Total income is 28 lakhs 12,200. Okay, so this is it with my total income computation, but they asked us to do the tax payable calculation as well. So let's begin with that. So tax computation, total income of the assessee is 28 lakh 12,200. I will not split and all because only normal rate income. Basic exemption limit is 2 lakh 50 only because assessee is not a senior citizen. So up to 10 lakh, my assessee anyways has to pay 1 lakh 12,500 plus 30% of the assessee's income in excess of 10 lakhs, right? Come on, do the math, please. How much do you get? You will get here 6,56,160. No 87A rebate because total income is more than 5 lakhs. No surcharge because total income is within 50 lakhs. So straight away you will add cess at 4%. So after adding cess, you will get 6,82,406. Okay, now subtract your TDS credit. Remember section 194 TDS credit, we have already computed the number and we kept it ready also here. 1,10,000. Then we also had the advance tax number. Assessee has paid advance tax of 1 lakh. So what is the net tax payable? Net tax payable is 4,72,406, which you will round off to 472,410. Yes. So this is it with my normal provisions, guys, without 115 PSE. They were asking us which is better. But wait, normal is not over unless you think about AMT. In this question, will I have AMT? I don't have section 35 AD. I don't have section 10 AA. I don't have chapter 6A part C. So therefore, I will not even think about AMT. So my tax computation amount is how much my total tax liability is. Total tax payable is 472 410. Okay, you understood. Whenever you're computing tax as per normal provisions, please don't forget to check whether AMT is applicable or not, because in the examination they are not going to by themselves tell you every time also compute AMT. They will not. So you have to identify on your own. So you'll have to check. Normal tax computation is not complete unless you've checked about AMT. So assessee does not have any of these. So therefore, no AMT in this question. Okay, now come on, let's do the total income computation applying 115 BSE. I'll take the total income number as it is first, as per the normal provisions. As per the normal provisions, if you see, total income is how much? 28,12,200. Now, what are the things I have to adjust over here? What should I reverse? PGBP nothing. IFOS nothing. IFHP no self-occupied property here. Chapter 6A I will reverse. This was 80D. Chapter 6A 80D you will not get. So section 80D 52,000 I'll reverse. So therefore, my net income will be 28,64,200, guys. Simple. Now how to compute tax? Tell me. No special rate incomes. Straight away I'll compute tax. So income up to 15 lakhs, guys. 115 BSE. Income up to 15 lakhs. You'll anyways have to pay 1,50,000 plus 30% of the income in excess of 15 lakhs. Right? How much will this be? This is going to be 5,59,260. All right. Again, over here, no rebate because income is more than 7 lakhs. No surcharge because income is within 50 lakhs. So straight away, we'll add cess. So after adding cess, it will be 5,81,630. Okay. Now, after this, I'll also think about my TDS credit and my advance tax. TDS credit, we've already seen 1,10,000. Advance tax was 1 lakh. So the tax payable, net tax payable of my assessee will be 371,630. Now see which is better for the assessee. If my assessee is not following 115 BSE, assessee has to pay 472,410. Okay, but if the assessee is following 115 BSE, only 371,630, guys. So what will you conclude? Which is more beneficial? 371,630. Okay, now see, at this stage, I'll give you one small tip. Okay, see, if you had AMT, what would you do? Normal tax or AMT, whichever is higher. Okay, normal or AMT, whichever is higher. You will compute as per 115 BSE, whatever number you get. Out of these two numbers, whichever is lesser. If they say compute in the manner most beneficial, all right, normal or AMT, whichever is higher, this will become your normal income tax, this number, normal or AMT, whichever is higher. In 115 BSE, no AMT, guys. In 115 BSE, no AMT. So 115 BSE, you will find the number. This number or this number, whichever is lesser, that is what you will advise your assessee to follow. Whichever is more beneficial, no? So whichever is lesser only is more beneficial. So normal or AMT, whichever is higher, this will become your normal tax. This or 115 BSE, whichever is lesser. Alright, so that is it with this question, guys. Another total income question we've completed. Now listen, apart from this, I just want to discuss some smaller questions with you. Starting with this one, this is again a question which is sort of a total income question, but a smaller question, all right? The reason why I want to discuss this question with you is 80CCD will get covered over here. Generally, students are a little underconfident about 80CCD, but it's a very important section from exam point of view. Therefore, we're going to work this question out. Question number 4. Let's read the question and then we'll work it out. The question says that Mr. Ram, an employee of the central government. So guys, did you notice? Employee of the central government. So Mr. Ram happens to be a central government employee over here. He is posted at New Delhi. He joined the service on 1st February 21. Details of his income for the previous year 23-24 are as follows. So they've given us sort of adjustments. What are they asking? Determine total income of Mr. Ram for assessment year 24-25. Ignore provisions under 115 BAC. So which means we have to do the computation without 115 BAC. Normal provisions, guys. Are you ready? Good. Revision under chapter 6A will happen for you through this question. All right. Come on, let's begin. They're asking us to compute only total income, no tax computation, and that too without 115 BAC. So absolutely no worry at all. Come on. First of all, basic salary, which itself means we have salaries head, guys. So salaries, let's give reference to working note 1. Let's open working note number 1 for salaries. Here we have basic salary. How much? 3,80,000. Okay. Then what are they saying? DA is 1,20,000. 40% is forming part. So DA is 1,20,000. Later, when we do retirement benefit calculations and all, only 40% is forming part. Okay. Now see, next adjustment, very interesting adjustment. Both Mr. Ram, who is Mr. Ram? The assessee, the employee, and government, who is the government over here? Employer. Both are contributing 20% of basic salary, which means 3,80,000 into 20%, which is going to be 76,000, guys. So both of them are contributing 76,000 to pension scheme referred to in section 80 CCD. Now listen, okay. Working note number 2, pension scheme. I'll open this working note and I'll open working note number 3, chapter 6A. Simultaneously, you watch me do it. Listen, nicely, carefully, sit up straight, listen to me. Pension scheme. There are 2 adjustments here, guys. Employees' contribution, employer's contribution. One explanation without background music, listen to me, and then you are very confident and good to handle this. Listen to me. See, employees' contribution. 1 second. There's a question in the chat box. Ganesh is saying ATD should not exceed 50,000. Yes, Ganesh, it should not exceed 50,000. But here in this last question, if you see, ATD we had 52,000 because 47,000 was for parents category within 50,000. 5,000 was for family category within 25,000. So 50,000 limit is for each category separately, right? Parents category separate limit, family category separate limit. Generally for each category the limit is 25,000. But because there was one senior citizen over here, that is why the limit became 50,000. I hope you understood, Ganesh. Okay, coming back to this now, I have employees contribution, I have employers contribution. How much is the contribution? 76,000, 76,000. Okay, employees contribution, what to do, guys? Employees contribution, I have 2 subsections involved. I'll have ATCCD1 and I'll have ATCCD1B. Out of these 2 sections, which section should I always do first? Always ATCCD1B first, then only ATCCD1. Okay, ATCCD1B, how much you will get? ATCCD1B, straight away you can get 50,000. Okay, now what is the balance? Tell me. The balance I am left with is 26,000. But under ATCCD1, what is the maximum allowed? Under ATCCD1, what is the maximum allowed? 10% of salary. Now here salary means what? Basic salary plus DA forming part. Full stop. No commission, guys. Okay. So basic salary is how much? 3,80,000. How much is the DA forming part? Total DA is 1,20,000. Only 40% is forming part, which is going to be 48,000. Okay. So 10% of this. So what is this going to be? 3,80,000 plus 48,000 into 10%. This is going to be 42,800. This is my maximum limit, guys. So under ATCCD1, how much will I get? 26,000. Maximum is 42,800. It is within 42,800. So under ATCCD1, I'll get 26,000. Under ATCCD1B, I'll get 50,000. Okay. So I'll come back to chapter 6A. Here I'll have ATCCD1B 50,000. All right. And then ATCCD1 will go to ATCCE. So under ATCCE, I'll have 3 sections: ATC, ATCCC, and ATCCD subsection 1. So I have NPS 80CCD subsection 1. How much over here? 26,000. Did you understand in here first? Employees contribution, guys, 76,000. First 80CCD 1B. Okay. Balance only 80CCD 1. 80CCD 1B, how much you'll get? 50,000. 80CCD 1 balance is 26,000. Maximum is 10% of salary, 42,800. 26,000 is within 42,800. 26,000 allowed. Now listen, employer's contribution is 76,000. Employer's contribution, there will always be two tax treatments. First, it will be taxed under the head salary. So the 76,000 number, as it is employer's contribution to NPS, first, as it is the employer's contribution number, I will tax it under the head salaries. Okay. After this, my next adjustment, I will allow it under section 80CCD subsection 2. Now tell me, under 80CCD subsection 2, generally how much do you get, guys? Under 80CCD subsection 2, generally how much maximum you get? 10% of salary. But if the employer is central government or state government, then maximum how much you will get? Then you will get maximum 14% of salary, guys. So what is 14% of salary? See, we've already computed this. So 14% of 3,80,000 plus 48,000. Salary is same, basic salary plus DA forming part. Okay, salary is same only. So 3,80,000 plus 48,000 into 14%, 59,920. So contribution is 76,000, but under 80CCD2, how much I will get? Only 59,920 only I will be getting. You are understanding? So employees contribution, if you see, two things I did, 80CCD1 and 80CCD1B. Employer's contribution, also two things I did. First, I'll tax it under the head salaries, and then I will give deduction under section 80CCD2. 80CCD subsection 2 will not come inside 80CC, separate section altogether. How much was it? 59,920. Okay, this adjustment was a very important adjustment. Then look at the next one. Gift received by Ram's minor son on his birthday from friend, 70,000. Tell me, birthday, is it an exempt occasion? No. Is friend exempt person? No. Amount is 70,000, more than 50,000. So first of all, do you agree 70,000 is fully taxable, guys? Taxable for whom? The minor son has received it. It's taxable for the minor son. But this income is not out of skill, talent or labor. Minor son is not disabled. So therefore, this minor child's income will be clubbed with the parent's income. And after clubbing, I will give 1,500 exemption. Simple adjustment. So this will go under the IFOS head. I'll come to the IFOS. I'll create the IFOS head. Let's say IFOS working note number 4. So after my working note number 3, working note number 4 for IFOS, here I have gift of the minor son, which I am clubbing. The amount is actually 70,000, but I will remember to give 1032 exemption of 1,500. Guys, remember 1,500 per child exemption you get, okay? No limit on the number of children. And if assessee is following 115 BSc, then this 1,500 exemption you will not get, okay? So the amount is 68,500 here. And then on 25th March 23, Mr. Ram gifted a sum of 6 lakhs to Mrs. Ram to start a business by introducing such amount as a capital. On 1st April 23, her total investment in business was 10 lakh, which includes 6 lakhs gifted by Mr. Ram. During the previous 23-24, she has a loss from such business of 1,30,000. You club income. Do you also club losses? Yes. Clubbing is not only clubbing of income. Clubbing includes clubbing of losses also. So assessee has transferred 6 lakhs to his spouse. Spouse has invested into business. So income from the business you will club, right? But there's a formula for this, right? So what is a PGBP? PGBP is a loss negative 1,30,000 into what is the investment out of transferred asset on 1st April. We'll always say the numerator and denominator on 1st April, guys. So the numerator is going to be 6 lakh rupees and the denominator is total investment. Total investment is 10 lakhs on 1st April. So 1,30,000 into 6 by 10, 78,000 of the loss. This is going to be clubbed with Mr. Ram's income. I'll repeat again. Listen carefully. Mr. Ram, he transferred 6 lakhs to his spouse. Spouse has put that 6 lakh into business. So whatever income the spouse earns from the business proportionate to 6 lakhs will be clubbed with Ram's income. Your spouse did not earn income. She incurred loss. So loss will be clubbed. But full loss you will not club. Proportionately only you will club. What's the formula? The formula is PGBP into investment out of transferred asset on 1st April of the year divided by total investment on 1st April 23. Logic and all you would be knowing. We've discussed the logic and all in full detail already in class. So this is your formula. So PGBP 1,30,000 negative into numerator denominator both on 1st April of the year. So 78,000 will be clubbed. This is business loss. So I will not handle it right away. I'll keep it in the margin. Business loss is 78,000. I'll handle it later. Then Mr. Ram deposited 70,000 in Suganya Samriddhi account. Suganya Samriddhi account will go to which section, guys? Come on, tell me. Suganya Samriddhi, it will go to section 80C, everybody. Chat box, if I see everybody is okay. Looks okay till now. All right, so 80C. So I'll come back to my chapter 6A, section 80 CCE. Under this, I'll have the Suganya Samriddhi account. The amount is 70,000. Then the question says, he contributed 40,000 in an approved annuity plan of LIC to claim 80CCC. So 80CCC is 40,000. Then the question says, look at this one. He took an education loan from SBI for his major son who is pursuing MBA course from Gujarat University. He has paid 15,000 interest on such loan. See guys, interest on education loan. I will think about section 80E. Son can be major also, not a problem. The lender has to be bank or financial institution or approved charitable institution. Yes, it's a bank. The education has to be after school. Yes, it is an MBA after school. Education can be in India, outside India, doesn't matter. 15,000 interest. Interest should be actually paid. Yes, it is paid. So all my conditions are fulfilled. Section 80E, 15,000 interest I'll get as a deduction. You know, right? 80E is only on payment basis. Assessee actually has to pay the interest. Only then it will be allowed. And assessee has paid. So therefore, it's going to be allowed. Okay, guys. So that's it. That's it with the adjustments. Let's go ahead and close. Come on, add, subtract, find your net salary income. You'll get 5,76,000. Remember to subtract section 16 deductions. We'll get 50,000 standard deduction. No professional tax over here. No entertainment allowance over here. So 5,26,000 is going to become your taxable salary. I'll take this to my main answer, 5,26,000. Then after this, total chapter 6 says how much? 80 CCE, if you see, this is going to be 1,36,000, guys, within the limit of 1,50,000. So you have 50,000, 136, 59, 920, and 15,000. So add up. Total chapter 6 is going to be 2,60,000, 920. We'll remember to take this to the main answer. IFO is only one number we have, 68,500. So therefore, if you add up, the GTI is going to be 5,94,400. No need to split, guys, because my assessee does not have any special rate income. But wait, we have business loss also 78,000. I can't adjust the business loss against salaries, but I can adjust against IFOS. So I can adjust business loss, interhead adjustment I'm doing, but I can adjust only 68,400. I still have how much business loss left? I still have 9,600 business loss left. No choice. I'll have to carry this forward to the next year. Totally, it can be carried forward for 8 years. I can carry forward to the next year only if I file my ITR on time. Okay. So what's the net number here? 5,26,000. No need to split because no special rate income. Straight away, we'll subtract chapter 6A. We've already done the computation, guys. 260,920. Subtract it over here. So what is your assessee's total income now? 5,26,000 minus 260,920. You will get 2,65,080. All right, you got it. So this is going to be our answer to this question. No need to round off because it's already in multiples of 10. No need to compute tax liability because they haven't asked us. All right. So what was the learning through this question? A lot of adjustments under chapter 6A got covered for us through this question. What happened? Did I make a mistake? Okay, IFO is 68,500. Is it fine? 68,500. So how much business loss am I going to carry forward now? I am going to carry forward 9,500. All right. Okay, so ATE, you understood? ATE, the loan has to be from whom? The loan has to be from bank, financial institution, or approved charitable institution. Okay, and the education can be in India, outside India, doesn't matter. All right, and the education has to be after school, and you actually have to pay the interest. Only then you will get deduction under ATE. See, in chapter 6A, you have 4 sections for interest, guys. You have section ATE, education loan interest. You have ATEE, housing loan interest. ATEEA is also for housing loan interest, and ATEEB is for electric vehicle loan interest. Now, ATE, no maximum limit. ATEE maximum 50,000. ATEEA maximum 1,50,000. ATEEB maximum 1,50,000. Okay, now in this section only we say that we will give deduction only on payment basis. But these 3 sections, whether you've paid or not, doesn't matter. These 3 sections you will get deduction on accrual basis. Whether you've paid the interest or not doesn't matter. If you've incurred the interest, you will get a deduction under these 3 sections. All right, everybody? Yes, understood. I'm hoping good number of adjustments are getting revised for you. All right, there's one question in the chat box. Sabiha is asking us, professional tax by employer will be included while doing normal provision. Should we include it while doing 115 BAC? No. Under 115 BAC, only one section 16 deduction you will get, and that is standard deduction. Professional tax deduction you will not get. Entertainment allowance deduction also you will not get. Okay, so this is it with question number 4. All right. Now, after this, I have a few more questions to discuss with you, but these are going to be small, simple questions only. Can we start with question number 3, everybody? This question, the reason why I'm doing it is examiner loves asking this question, guys. Same question, copy paste multiple times he gives in the examination. 1 second, let me just put my laptop on charge. Yeah, listen, guys. So question number 3, same question, copy paste multiple times we've seen in ICI publications and examination question papers as well. So definitely want to work this question out for you all. Let's read the question first. Miss Geeta, a citizen of India, she got married to Mr. Peter of Australia, and she left India for the first time on 20th August 23. She has not visited India again during the year. Guys, with this much information, I can find her residential status, guys. So residential status, how do we do the computation? First of all, will I apply the special provision or will I apply the regular provision? I'll try applying special provision. Special provision is your 120 days provision. But I can apply this only assessee is an Indian citizen or person of Indian origin, condition fulfilled. But assessee should have visited India in the previous year. I can apply the 120 days criteria only if assessee has visited India in the previous year. Now, in this question, has the assessee visited India? No. Instead, the assessee is leaving India in the current year. So, therefore, I can't apply the special provision. I can't apply. 1 second. Have you reconnected? we were in this question. Okay, so I was telling you that we are trying to find the residential status of this assessee. First of all, we are trying to apply the special provision. Special provision is a 120 days provision, but I can apply that only if condition 1, assessee is an Indian citizen or person of Indian origin. Yes, my assessee is an Indian citizen, but is your assessee visiting India in the previous year? No, assessee is not visiting India. Instead, assessee is leaving India. So I can't apply the 120 days provision. I can apply only the regular provision, that is a 60 days provision. But regular provision, what's your basic condition 1? That in the previous year, assessee should have stayed in India for at least 182 days. See, the question says assessee left India on 20th August. So April, May, June, July, and August. So totally my assessee has been in India for how many days? Assessee has been in India for only 142 days, guys, which is less than 182 days. So therefore, basic condition 1 not fulfilled. Now, regular provision, basic condition 2, pause, check, think. Is your assessee an Indian citizen who has left India in the previous year as a crew member of an Indian ship? No. Is your assessee an Indian citizen who has left India in the previous year for business, profession, or employment? No. Is assessee an Indian citizen who has visited India in the previous year? No. Is assessee an Indian? See, what are the 3 situations? Is assessee an Indian citizen who has left India in the previous year for as a crew member of an Indian ship? No. Second, is assessee an Indian citizen who has left India in the previous year to take up business, profession, or employment outside India? No. Third, is assessee an Indian citizen or a person of Indian origin who has visited India in the previous year? No, none of the 3. Therefore, basic condition 2, I can check. Previous year, did the assessee stay in India for at least 60 days? Yes. 4 preceding previous years, did the assessee stay in India for at least 365 days? The question says she left India for the first time now only. So therefore, all 4 years, yes, she has stayed in India. So basic condition 2 fulfilled. Definitely, she's going to be a resident, guys. Now, ROR or RNOR, I have 2 additional conditions. Additional condition number 1 says, in 7 preceding previous years, she should have stayed in India for at least 730 days. Definitely fulfilled because the question says now only first time she has left. Second additional condition is, in at least 2 out of 10 preceding previous years, assessee should be a resident. Forget about 2 out of 10. All 10 preceding previous years, assessee will be a resident over here because assessee has not even left India before this. So both my additional conditions are fulfilled. Assessee becomes ROR. Now listen, some of you seem to be a little underconfident about basic condition 2. Let me tell you one last time. When basic condition 2 will not apply. Listen to me. When will this basic condition not apply? There are 3 situations, okay? First situation, assessee is an Indian citizen, okay? Then assessee has left India. And why has he left India? Because he's a crew member of an Indian ship. In the second situation, again, assessee is an Indian citizen, okay? And again, he has left India. Why? Because, for example, he wants to take up an employment outside India. Third situation, this time assessee is an Indian citizen or a person of Indian origin and he's not leaving India. This time he is visiting India. Okay, please remember here, left should be in the previous year, left should be in the previous year, visiting should be in the previous year. So Indian citizen who left India in the previous year as a crew member of an Indian ship. Assessee who is an Indian citizen who left India in the previous year to take up employment outside India. Or assessee who is an Indian citizen or person of Indian origin and visited India in the previous year. If any of these 3 situations are applicable, basic condition 2 will not apply. Now, okay, yes, so my assessee is ROR. Because assessee is ROR, you can say global income will be taxed for the assessee. All right, they have given us 4 adjustments over here. What are they asking us? You are required to determine residential status. We've already determined. Compute business income and agricultural income. So 2 things they're asking us to compute: the business income number and the agricultural income number. I'll do it here itself. All right. So see, income from sale of latex processed from rubber plants grown in Kanyakumari. So rubber grown and manufactured in India. What's the number that comes to your mind, guys? 65, 35. Remember, the bigger number is agricultural income. The smaller number is business income. Okay. So 1,50,000 into 65%. 97,500 is agricultural income and 1,50,000 into 35%. The smaller number will be business income. You understood? Composite income, guys. Bigger number is agricultural income. Smaller number is business income. Bigger, what am I saying? Bigger number is agricultural income. Correct only. Bigger number is agricultural income. Smaller number is business income. Okay. Then income from sale of coffee. Grown, cured, roasted and grounded. So coffee grown and manufactured, but in Colombo. So not in India. So I can't apply composite income provision. Are you understanding? I can apply composite income provision only if grown and manufactured in India. This is in Colombo. So first of all, I can't apply composite income, guys. But I will still consider, because SSC is ROR, global income is taxable. So 5 lakh, entire 5 lakh will become business income. I can't apply composite income concept. When can I apply composite income concept, guys? Only if it is grown manufactured in India. Coffee grown manufactured in India, 60-40 you can apply. But you can apply this only if it is composite income. It will be composite income only if grown manufacture happens in India. Here it has happened in Colombo, which is in Sri Lanka, which is outside India. So I can't apply composite income concept. I can't apply 60-40 concept. So no agricultural income. Fully I will put it under business income. All right. Then income from sale of tea grown and manufactured in West Bengal. Tea grown and manufactured in India, 60-40 will come into the picture, guys. Again, the same thing. Bigger number will be agricultural income. Smaller number will be business income. So 12 lakh into 60%. 7 lakh 20,000 will be agricultural income. And 12 lakh into 40%. 4 lakh 80,000 will be your business income. And lastly, income from saplings. Income from saplings and seedlings grown in a nursery at Cochin. Basic operations were not carried out. I don't care. Nursery, guys. Nursery in India. Seedlings and saplings grown in a nursery in India. Entire income will be agricultural income. Remember, I told you for nursery, whether basic operations carried on or not doesn't matter. Nursery, seedlings and saplings in India, straight away agricultural income. That's all, guys. Add up. What's your total business income here? Your total business income will be 10 lakh 32,500. Your total agricultural income is going to be 10 lakh 17,500. Are we clear? Yes, so here the main reason why I wanted to do this question was, number one, residential status, one small revision I've given you. Number two, this adjustment, guys. Composite income concept I can apply only if grown and manufactured in India. Here, because in Colombo, outside India, that's why I cannot consider as composite income. So fully I will consider it as business income. All right. And a second major learning over here, nursery. Nursery in India, seedlings and saplings, 100% agricultural income. Whether basic operations are carried on or not, it doesn't matter. All right, guys. So this was question number 3. All right. Now, can I take you to the next question? Question number 5. Second last question, guys. This question and then question number 7. Just 2 more questions I have to discuss with you. Maximum 15 minutes and then I'll close. Okay. Listen now. Question number 5. This is an MCQ question. Okay. A very important MCQ question. Listen to me. See, tell me the provision first. Salary income. Where does your salary income accrue? Salary income accrues in the place where your assessee renders service. That is where salary income accrues. But there is one exception, guys. The exception is condition 1, if the assessee is an Indian citizen. Condition 2, employer is Government of India. Condition 3, the assessee is rendering services where? The assessee is rendering services outside India. If all these 3 conditions are fulfilled, even though the service is rendered outside India, the salary income, the allowances, the perquisites, all of them will accrue in India. After accruing in India, the allowances and perquisite will be exempt, the salary will be taxable. Do you remember learning this provision? Yes, my main provision is salary accrues wherever I render service. But I have an exception. Condition number 1, if the assessee is an Indian citizen. Condition number 2, if the employer happens to be Government of India. And condition number 3, the services are rendered outside India. Even though the services are rendered outside India, still the salary income will be accruing in India, guys. Salary, allowance, perquisite, everything will accrue in India. After accruing in India, allowances and perquisite will be exempt, guys. Clear. Keep this in mind. And now look at this. Mr. Ross, an Australian citizen, is employed in Indian Embassy in Australia. He's a non-resident, guys, non-resident, which means only Indian income only will be taxable for him. He received salary, he received allowances in Australia. So where is the income received? The received is outside India, guys. He received in Australia. From whom? Government of India for the year ended 31st March 24 for services rendered by him in Australia. In addition, he was allowed perquisites also by the government. So see, what are his income? Salary, allowances, perquisites. All the three are received where? All the three are received by him in Australia. All the three are received by him outside India. Question is, where do they accrue? Generally, where they accrue? In the place where you render services. Where did he render services, guys? He rendered services outside India in Australia. Indian Embassy in Australia. He is rendering services in Australia. He is rendering services outside India. So, but then will the exception apply? Employer is Government of India. Yes, he is rendering services outside India. But is he an Indian citizen? He is not an Indian citizen. So therefore, I can't apply the exception over here. General rule will apply over here. He is rendering services in Australia. So his salary income will also accrue in Australia, accrue outside India. So therefore, this income becomes a foreign income. And will it be taxable for my non-resident assessee? It will be not taxable. So see the correct answer now. Salary, allowances and perquisites received outside India are not taxable in the hands of Mr. Ross since he is a non-resident. Are you understanding? Yes, you're getting the point. Basically, what I'm trying to tell you over here is that I cannot apply the exemption. Clear? Yes, a very interesting question. I hope you understood. General rule is salary accrues wherever I render services. I can apply exception only if all the three conditions are fulfilled. Condition 1, Indian citizen. Condition 2, employer should be Government of India. And condition 3, assessee should be rendering services outside India. Can I take you to the last question now? Yes. All right. Listen now. Come to this question number 7. Question number 7 says, Sagar, a chartered accountant, is presently working in a firm in India. He has received an offer for the post of Chief Financial Officer from a company at New York. As per the offer letter, he should join the company at any time between 1st September to 31st October. He approaches you for your advice on the following issues to mitigate his tax liability in India. Date by which he should leave India to join the company. Direct credit of part of his, okay, we'll come to this later. Let's finish this. Date by which he should leave India to join the company. See, he approaches you for your advice on the following issues to mitigate his tax liability in India means what? Simple words, he does not want to pay tax in India, guys. So he's asking you, when should he leave India? See, if he's a non-resident, okay, and if he does not have any Indian income, he will not have to pay any tax in India. So, when should he leave India so that he becomes a non-resident? Are you understanding the interpretation? The whole reason why I'm working this question out for you is to show you this tiny point in the interpretation aspect. They are not asking you very straightforward manner that, when should he leave so that he becomes a non-resident. They are saying that he wants to mitigate his tax, which means he just does not want to pay tax in India. So he will not pay tax in India only if he is a non-resident, guys. Only then he will not pay tax in India. So when should he leave India so that he becomes a non-resident so that he doesn't have to pay tax in India? That interpretation I want you to understand. Now see, regular provision, special provision. Special provision is a 120 days criteria. I can apply this only if condition 1, assessee is an Indian citizen or a person of Indian origin, but that assessee should have visited India, guys. Is this assessee visiting India in the previous year? No, assessee is not visiting India. Instead, what is happening in this question? He did not visit India. Instead, he is leaving India. So first of all, do you agree? I can't apply the 120 days criteria over here. I can't apply the special provision over here, guys. So therefore, no choice. I have to think about the regular provision only in this question. Yes. Now, regular provision, which basic condition will apply here? See, basic condition 1, basic condition 2. I have two conditions. Basic condition 1 says previous year assessee should have stayed in India for at least 182 days. Basic condition 2 says previous year assessee should have stayed in India for at least 60 days. And 4 preceding previous years put together, he should have stayed in India for at least 365 days. See, in this question, basic condition 2 will not apply, guys, because assessee is an Indian citizen who is leaving India in the previous year because he wants to take up employment outside India. He wants to take up a job outside India. No, he wants to take up CFO post in New York. So that is why he is leaving India. So therefore, basic condition 2 will not apply here. So only one basic condition will apply over here, and that is your basic condition 1, which says in previous year assessee should have stayed in India for at least 182 days. So do you agree, if my assessee stays in India for 181 days only, then assessee will become a non-resident, guys, because in that case basic condition 2 is not applicable and basic condition 1 will not get fulfilled. So I will tell my assessee to live in India in such a way that he stays in India for only 181 days, because if he reaches 182 days, he will become a resident. Why am I not applying basic condition to that also, you understood? Because assessee is an Indian citizen leaving India in the previous year for the purpose of employment outside India. So basic condition 2 itself is not applicable. So I will think only about basic condition 1 over here. Okay. So therefore, I'm telling the assessee leave India within, ensure maximum you stay in India in 181 days, for 181 days only. So April 30 days, May 31 days, June 30 days, July 31 days, August 31 days. In September, how many days maximum? Do and see. See, this itself is becoming 153 days. So, 28th September he should leave. 28th September, if he leaves, he has stayed in India for exactly 181 days. 181 days means he will not be a resident. But if he is staying in India for 181 days, basic condition 1 will not get fulfilled. Are you understanding? Yes, so we will tell the assessee that assessee, you leave India in such a way that you don't stay in India for more than 182 days. If you even reach 182 days, even exactly 182 days, if you reach, you will become a resident. So you should leave on or before 28th September. 28th September should be your last day when you are in India. On or before 28th September, you leave India. Only then you will be non-resident. Only then you will not pay tax in India. So 28th September 2023, leave India. Then the question is asking us, look at this one, okay? Common sense question. Direct credit of part of his salary to his bank account in Delhi. See, if his salary is directly getting credited to his bank account in Delhi, then in that case, do you agree the salary is received in India? Directly it is getting credited to his bank account in Delhi. It's not a remittance. It is directly getting credited. So his salary income is received in India. If it is received in India, it will become Indian income. If it becomes Indian income, he will have to pay tax. But he does not want to pay tax, guys. So we'll tell him, listen, don't directly credit it in India. If you directly credit it in India, it will become received in India and it will become taxable for you. So if you want to mitigate your tax liability, if you don't want to pay tax in India, don't let your income directly get credited in India. Understood, everybody? If, see, the account is jointly maintained with mother, doesn't matter. If the income is directly credited into India, it will be received in India. If it is received in India, it will become taxable. It will become Indian income. So assessee, don't let your Indian income get credited into Indian account. You receive your entire salary in New York, and then you want to send money to India to meet requirement of your family. You receive your salary income in outside India itself first, and then you send it to India. You're understanding? See, you remember learning, I received my salary outside India, and then I remitted to India. Will it be taxed, guys? No. Remittances and all we ignore, right? After receiving, what you did with the salary, I don't care. So this is what we will advise to the assessee. We will advise you receive salary outside India itself. After that, you send money to your family in India for their requirements. But don't let your salary income directly get credited in India. If it directly gets credited in India, it will become received in India. So you can receive the salary outside India, then remit it to India. If you do it like this, no tax in India also, and your family's requirement will also get met. But if you directly let it get credited in India, then in that case, it will become received in India and it will become taxable for you. Understood, guys? Yes. So these were the 7 questions that I definitely wanted to work out for you before your examination. I hope everybody is nice and clear. All right. Now just 5 minutes, okay? Just some closing points and then you can get back to your revisions. See, listen to me. During your examination, be careful about 80TTA, 80TTV. As soon as you see FD interest, savings bank interest, remember to think about these sections. Point number 1. Point number 2, do not forget rounding off. Okay, total income number also you have to round off. Your final tax number also you have to round off. Point number 3, think about rebate, think about surcharge, don't forget. Point number 4, chapter 6A, especially chapter 6A, properly do a working note. Chapter 6A, you will not go wrong. You are very strong in chapter 6A. Do a proper working note for chapter 6A. Good number of marks are generally allocated for chapter 6A working notes. Point number 5, do not be even one bit worried or tensed while you work out the paper. Your mindset has to be like this. I'm going to do this paper the best I can. I have prepared really, really well. I will not make any silly mistakes. You will keep saying this to yourself and you will work the paper out. There has to be absolutely no fear while working the paper out. Okay, guys, walk into the examination hall with confidence. See, you might be feeling that some part of tax you were not able to finish revision. There might be some part still pending for you, but relax. Do as much as possible, but slow down, calm down. Last 1 hour, don't try to do too much revision, because last 1 hour, too much revision, fast revision, if you try to do, you will start, you'll literally start panicking in the examination hall because your heart's beating really fast then. So ensure last 1 hour you go slow. Just flip your pages. Be confident. Know that, believe that all the knowledge which is required for today's exam, you have it. Know that, believe that. You will not make silly mistakes. Believe it, okay? You will do the paper as nicely as possible. Yes, guys, believe it, genuinely believe it from the bottom of your heart, believe it, and go do the paper as nicely as you can. Stay calm in the examination hall. You may find one adjustment which you don't know what to do. Don't let that affect you. Focus on what you know and not on what you don't know. Get my point? Don't let what you don't know affect your performance in what you know. All right? Calmly, slowly, one question you take and you finish off your answer paper. All right, guys. So with this, I think we are good to close for today. Whatever I had planned to do for you, I've completed it all. All right. Now go out there and rock your paper and tell me after your examination how nicely you did the paper. But remember, don't forget this, the golden rule, stay calm, please. Nothing to fear. Even if you were not able to finish revising, it's okay. You have all the knowledge. So much preparation you have already done. You have all the knowledge. So even if you were not able to finish some revision, it is okay. Finishing extra points now will not make much difference. You already have the knowledge. All right, guys. So go out there, rock it, and then we will meet after the exam. Thank you. Bye-bye.